So on June 5th, the United Nations celebrated World Environment Day, which inspires my deep dive today about ESG and sustainability reporting in Saudi Arabia. I may have mentioned this in the past, but I used to be corporate social responsibility manager for 5 years at Rawabi Holding in the Eastern Province in Saudi, which is a diversified holding company that operates in marine services, construction, lots of oil and gas services, etc. And I was a corporate social responsibility manager. So I ran a lot of social programs, but I also was heavily involved in the sustainability initiative. And I have worked in CSR and sustainability for so many years and continue to do that. So it's something that I really enjoy thinking about and talking about, in addition to a lot of the work that I do. And actually the youth empowerment stuff that I used to do at Rawabi is what inspired my PhD. So it's still quite relevant and integrated. But I wanted to talk a bit about sustainability reporting in Saudi, which as this financial year concludes for many companies in the kingdom, companies are reporting. There's a lot of that in the news. I wanted to shed a little bit of light on another type of reporting. So not just the financial reports, but what is gaining momentum within the kingdom. So ESG is not necessarily always seen as a positive thing. A lot of companies are accused of kind of greenwashing their books by presenting things that they do related to the environment, their governance, and their social contributions. But it's something that's still gaining momentum around the world. I think there are a few countries where sustainability reporting is in decline, but more than $35 trillion of assets worldwide are said to be monitored using some sort of sustainability lens. And there's an increase in 55% in reporting since 2016. Investors, banks, businesses, they've all signed up to a series of different alliances. Bosses of S&P 500 and S&P 500 companies now mention ESG, according to The Economist, 9 times a quarter in all earnings calls on average, compared with just once, if at all, in 2017. So within Saudi Arabia, this is something that's also starting to come up more often. So ESG reporting, it's also widely known as ESG disclosure or sustainability reporting, is a type of public reporting that discloses a company's performance on the environment, social, and governance criteria. There is not one standard way to report on this, but there are several standards that companies can and do follow. The Global Reporting Initiative is one. UN Sustainability Development, the SDGs, Sustainability Development Goals, are another set of standards that can be used to report on how companies are performing in those 3 areas. And why this can be really important in Saudi is that it encourages companies to be more transparent about how they do business, and it also encourages them to consider aspects of the company management that they may not have paid attention to in the past. As the kingdom opens up, this can be really appealing to foreign investors. And ESG is really important for funds and investors that are looking specifically at companies and how they comply with different regulations. So it's becoming increasingly controversial as well. And I think that despite that, there are a lot of really good things that can happen when companies start to introspect and think about how they are running their business. So besides the regulatory push, increased demand from socially conscious investors and consumers and growing green finance initiatives have spurred an interest in ESG reporting. The MENA ESG 2023 report by Bain & Company highlighted that investors in the Middle East are increasingly integrating ESG risks and opportunities into their decision-making and are committing to more net zero targets. In Saudi Arabia in 2017, the Capital Market Authority, or the CMA, issued a new corporate governance rules, which would enhance the rights of shareholders and board members. And the CMA also issued kind of guidance on how companies can report. So they address critical ESG areas such as conflicts of interest, board member responsibilities, internal auditing, social responsibility initiatives. Publicly listed companies are also required to publish non-financial ESG reports in certain instances. Moreover, the CMA issued the Corporate Governance Code in 2023, highlighting standards for board directors, disclosure requirements, and shareholder rights. The code aims to increase accountability, improve foreign investment, and protect investors. Greater ESG framework regulations across the GCC have also led to a greater integration of ESG practices into company strategies. So according to 2023 PwC Middle East ESG report, 64% of respondents reported having an ESG strategy in place, and only 7% said their company had no ESG strategy. So within Saudi again. So I think when I said that companies were required to report, that's not in Saudi, but that's more kind of looking at the GCC markets as a whole. In Saudi, it's not a regulatory requirement at the moment, but there's talk that it might be. The country's stock exchange has published ESG guidance that includes a list of common ESG themes such as labor management, controversial sourcing, supply chain, labor standards, and tax transparency. And according to the stock exchange site in 2018, Tadawul, the Saudi exchange, which was formerly known as the Saudi Stock Exchange, became a partner exchange supporting the UN Sustainable Stock Exchanges Initiative and working to promote ESG awareness initiatives and encourage sustainable investment in collaboration with market participants such as issuers and investors. Since then, Saudi Exchange has engaged with listed companies, standard setters, index providers, ratings providers, investors, and other stock exchanges through a myriad of mediums to help advance ESG disclosure in the Saudi capital market. The exchange is focused on raising awareness and encouraging listed companies to disclose ESG. So you can see that there's a lot happening in the area, and to advance ESG concerns in the Saudi capital market. Saudi Exchange encourages listed companies to identify, prioritize, and assess the ESG factors most critical to their business. I will say that it is not easy, and organizations are embracing this, but it is difficult. And I think arguably the G of ESG has been a more predominant historic concern for Middle Eastern investors looking to screen for alcohol, gambling, tobacco. But the full range of ESG factors is now becoming more and more relevant to both Middle Eastern and global investors investing in the region. And companies operating in Saudi and the broader Middle East tend to have lower environment, social, and governance and overall ESG scores compared to counterparts around the world. I think you can think about things like the Saudi Green Initiative that includes the first wave of over 60 programs and projects representing a total investment of more than 700 billion riyals or $187 billion to boost the green economy. And it's helping position the country as an international leader in sustainability, arguably. So there's a lot that's happening in that space, and a lot of companies are starting to produce year-on-year ESG reports so they can really actually start to compare their performance, from previous years and set standards and targets that are relevant to their own industry and their own operations. You can read ESG reports from the Saudi Electric Company, different banks, most of them have ESG reports. Riyadh Bank, for instance, has one, and more private sector companies, not listed private sector companies, are starting to produce some as well. So I just thought it would be kind of important to highlight that this is something that is happening. For a lot of companies, it still really is about their corporate social responsibility, which is oftentimes their charitable contributions, but they're starting to move into a slightly more sophisticated space and use some of these indices and standards to disclose their business operations from an ESG perspective.
Very good, Hannah. I think one of the challenges with ESG in general is that it's somewhat hard to understand in terms of how the impact is actually felt. And to some people, when they hear ESG, they think of ESG investing, and then that's where it sort of stops. And they think that that's investing that will help save the planet, will help fight climate change. And actually, that's kind of not what it is or how it works. And so that's where a little bit of the challenge comes in, because people say, oh, it's ESG, and like that means we're like covered or we're all good in that respect. And actually it's sort of the beginning, as you know, and I know you know this, but it's sort of interesting to think about because, for example, BlackRock had a fund and it was sort of an ESG fund and they were still investing in oil companies. And so there was a lot of people saying, wait a minute, I thought this was an environment fund. And it's like, well, not really. But Saudi Arabia, so there's really two things. There's the private sector investing and what they invest in, and is it governed by ESG? And then how is it governed? And what are the sort of things that are measurable? And then there is government policy and international policy on climate change and fighting global warming. And those actually are separate things, even though they share a similar goal. So I think So it's interesting to see Saudi Arabia's private sector looking at the government, looking at things like what the PIF is doing, looking at the Saudi Green Initiative and the Riyadh Green Initiative and, net zero targets by 2060, I think it is. And they're getting a signal from them that this is something that they're interested in, even as the largest oil producer in the world. This is what they recognize as the future. So for the private sector, they get these signals and say, okay, this is something we want to be a part of. So you have globally 78% of executives saying ESG is either a part of what they're doing or they're looking at incorporating it immediately, imminently. So this was a bit of a rambling response to you because I think it's interesting to see where it's going in Saudi Arabia because you have very interested private sector entities doing it. And yet it's still kind of anomalous as to what it is globally, and people are trying to make sure that they're all on the same page with it. So sorry about that rambling answer there. But
no.
It's a
I think
topic.
You touched on a lot of really important points. I think ESG rubs a lot of people the wrong way, especially investors, right? Because it does mean that you're presenting something that maybe isn't even what you should be doing as a company. You're a profit-seeking company. You should be serving your shareholders, right? And, arguably shareholders are not just what you should be looking at. You should be thinking about your stakeholders, and your stakeholders include the economy at large, which includes other communities. It includes the environment, and it includes kind of, just in general, people that might be second or third level kind of affected by what you're doing at the second or third level. I fall into the second camp a lot more. I do think that, yes, while not harming profit, you should also be thinking about your stakeholders, because that will ultimately harm your shareholders if you're not taking care of the rest of the communities and environment that are around you. And I also think that there's a lot of confusion about ESG and being just an environmental thing. So again, let's remember that it's environment, social, and governance impacts, right? So with the environmental, yes, you are thinking about climate change, energy efficiency, water, air, carbon emissions, biodiversity, etc. But it doesn't mean that you're going to stop all negative impacts. It means you're going to look at what is material for your company and how that is impacting the environment and how you can reduce the negative impacts, and then how you can set targets to continuously reduce your negative impacts. So, and also how you can improve that space as much as possible. From a social perspective, you're thinking a lot about human rights, especially if you're looking at the Global Reporting Initiative standards, or you're starting to think about the Sustainability Development Goals. And that means you're thinking about how people are impacted by your work, right? At the community level, but also at the employee level. So with Saudi companies, a lot of times what they start reporting on is how many women they're employing and how many Saudis they're training, because that again is looking at the communities that they serve and how they can maximize impact there. You're thinking about labor standards, but you're also thinking about customer satisfaction. You're also thinking about the supply chain and thinking about who you're dealing with, right? And who's in your logistics network, and how to make sure that they're also treating their employees fairly, that they're compensating them well. And so I do think that when you have the Saudi Exchange and the CMA coming in and putting these standards in, it's a really easy way to say, listen, we need to really enhance our way of doing business so we meet global standards. And these are standards that make good business sense, whether or not we've been doing them under ESG, sustainability, or whatever. This is something that we would like all companies to start doing better in these areas. And so I think it's a really good step in that way. And then of course you have the G, which is the governance, and that's making sure that you're transparent, you're combating corruption, you're doing things in a way that is kind of following industry best practices, board composition, company leadership, battling things like bribery. So ESG is not a bad thing, but pretending that you're doing good things when you're not, I think, is what's bad. So I think that learning from what's inside these standards is really important, and thinking about how to take businesses forward.
Yeah, that was just a really articulate and intelligent way to say what I kind of rambled about right before. And I think that's really good. I think part of my point was just that it's very tough when you have these at least these two things, the E and the S, which are intricately, intertwined and codependent, but they are very separate. So like somebody like me may focus on the environment versus the social versus the other way around. And then you have the governance part. It's like, this is a big thing that we're trying to wrangle into one term. And so I think that's where some confusion comes from. Interesting because in the VC world, it seems like climate investing has been around for a while. It actually still is very much picking up. I mean, 3.2 billion was raised last year with 18 new funds. And then you had this year, 4.1 billion for 16 funds just in the first quarter.